Dow up 436, and the Federal Reserve's first meeting of 2019 is in the books. No rate hikes, but we are not done yet. Let's close it out with Jeff Sica, CEO of Squared Investments, Alternative Investments, Bankrate Chief Financial Analyst Greg McBride, and Axios Markets Editor Dion Rabouin. Good to see all of you. Jeff Sica, did the Fed do right for stockholders today?
The Fed couldn't have did better for stockholders today. I think he's backtracked on just about every element of concern. I think investors heard exactly what they wanted to hear. He's backing off an aggressive interest rate raising policy. As a matter of fact, he's making it as if investors are believing that he may not raise interest rates at all, which I think is really helping the confidence of investors. Whether or not it's going to help in the long run with what we have going on with the trade controversy remains to be seen.
Dion has a look on his face like he caved. I don't know, Dion, what do you think?
Don't put words in my face. No, I was just going to say that Fed Chair Jay Powell, he looked a bit like Michael Phelps, the way he was backstroking away from his previous comments. This is the same guy who in October said we're far away from neutral. We've got a lot of ways to go. We've got so much more to go on hikes. That was one hike ago. Then he hiked in December. He said, well, you know, we'll see. But he said the balance sheet was still going to be running off. That thing's basically on autopilot is what he said. Then he comes out today, a month later, and basically says just the opposite. Now the balance sheet, well, we can talk about that. You know, more rate hikes this year. Well, we said 2 in December, but we can talk about that too. So Fed Chair Jay Powell looking very malleable, looking like he's really open to running everything that he said last year off the table.
Greg, maybe he's just speaking specifically to the housing market, which has, yes, slowed. The data do show pretty consistently. But what does this mean for mortgage rates and then home sellers and buyers? And will that juice the economy?
Well, we've seen mortgage rates pull back. They're down about 0.5 percentage point since the peak in mid-November. His comments today pushed those long-term yields down again. So this is good news for mortgage rates. I still don't know that that's going to be enough to juice the market, though.
Jeff, what are you buying now?
I think the one sector that's very compelling to me, and again, I'm a bear. I think the market's got a ways to fall, but bank stocks right now, which I never liked, as you know, Liz, bank stocks are looking attractive to me. I think especially considering the fact that you have the corporate tax rate lower, you have these banks trading at very low multiples. I think there's a good upside on the banks.
Dion, as you walk out of here, as we hit the closing bell, what is going to be your first thought about where we go in 6 months? Any more rate hikes at all for the rest of the year?
It doesn't look like it. The market is basically writing them off right now, going out to December. You look at CME Group's Fed Watch, they've got basically no hike, and the chances of a rate cut are about the same or just a little bit below the chances of another rate hike. Again, even though the Fed said at their most recent meeting they were planning on doing 2 more rate hikes this year. So the market has completely written it off. They think Powell has caved. They think that we've got no more rate hikes and potentially even some more stimulus in the form of pulling back that balance sheet runoff.
Greg, we got 10 seconds. Dow 25,000, and we know Friday's the jobs report. What do you think?
Well, I mean, you know, the job market is still doing really, really well. This economy is a lot stronger than Powell made it out to be today when he did a 180 on rates.
Agreed.